It's once again the time of year that brings with it not only the bitter cold, but also financials. Intel has published theirs showing a record year and also a rather good quarter, with 16.4 billion, net income of 3.6 billion, and an EPS of 73 cents per share. Now, all of that, of course, was in dollars. Now, their non-GAAP net income was $3.9 billion with an EPS of 79 cents, which is actually above the expectations of analysts. Now, they did use about $1.2 billion to purchase dividends and use $533 million to repurchase 15 million shares of stock. At the time of recording, Intel is trading at $37.98, which is actually up from the $35.54 last quarter, which is actually a gain of 6.8%. Now, I mentioned a second ago how they have actually exceeded the expectations of analysts. You might ask, well, what did analysts actually expect to happen? How much did they exceed those expectations? Well, analysts expected Intel to actually post earnings of 74 cents a share and 15.752 billion in revenue on a non-GAAP basis, according to an estimate from Thomson Reuters. But however, they have beat that fairly comfortably. However, over the year, they clocked in an impressive 59.4 billion on a net income of 10.3 billion and an EPS of $2.12. They also paid dividends of 4.9 billion and used 2.6 billion to purchase 81 million shares of stock. However, they did also share a few other things, including that revenue growth in 2016 was driven by strength across all their businesses, including full-year revenue growth in Internet of Things, data center, and client computing. Now, client computing saw a revenue of $9.1 billion, which is actually up 4%. Data center saw $4.7 billion, up 8%, and Internet of Things saw a revenue of $726 million, which is up 16%. However, we also saw an increase in non-volatile memory solution group's revenue of $816 million, which is up a rather tasty 25%, and also Intel Security Group revenue of $550 million, up 7% year over year. And also the Programmable Solutions Group revenue was at $420 million. Now, with all that said, they are of course looking ahead to 2017. They are expecting to more or less maintain these margins in the first quarter of this year at 62%, which is actually up 1.1 points from 2016, and non-GAAP margin is expected to be flat at about 63%. Now, that's not to say that all is well on the good ship Intel. There are of course some concerns with Ryzen on the way, but chances are fairly good that even if Ryzen does end up being really good and selling really well, in the short to medium term at least, the effect on their financial position is going to be negligible, as they are pretty prevalent in other areas. And of course, this is Intel we're talking about here. Long term, of course, we're going to have to wait and see, but analysts are predicting that with the medium to short term, the impact of Ryzen is going to be minimal. But of course, this is just a prediction based upon the fact that Intel has its fingers in a lot of pies, let's just put it that way. So basically, the TLDR of all of that is Intel is doing rather well for itself and has reported, as mentioned at the start, a record year with its Q4 2016 quarterly earnings, and looking to remain pretty comfortable as of course we go into the first quarter of 2017. Thank you very much for watching, and I'll see you next time.